Okay, so now we're going to talk about everyone's favorite, most liquid, most volatile asset class, the currency market. Now, I love this heat map here that's available on this platform because I can see clearly where the volatility is, which is exactly what currency traders love. We want to see a lot of that movement. We want to just get involved with a piece of that and come out with profits. Now, I outlined in the oil video why the Norwegian krona has actually, I said krona with an accent from somewhere, I don't know where. Apologies. Norwegian krona has depreciated in value relative to literally everything else, including other weak currencies, and that is because of its relationship with oil. We can see here where it has dropped 12.7% versus the dollar, it's dropped 10.3% versus the euro, etc. I think the lowest percentage drop is actually down here versus the Swedish krona. So it's really a weak currency at the moment due to the fundamental factors, and it's definitely something that's in play for the week and something we would want to be trading alongside with our biases for oil. So I would be looking to pair the Norwegian krone with anything that shows positive momentum to the upside for a good volatility trade. Let's take a look at other pairs. I have that up on my watch list sheet. Okay, so currencies in play. I took that concept from Mike Bellafiore in his book One Good Trade and the Playbook. He has stocks in play. I adapted the concept and I have currencies or symbols in play, but I use it for currencies really. The Euro USD, that rush for liquidity for the US dollar as it appreciates in value, maintaining its holds as the reserve currency during this time of crisis. All right, that has increased demand. Everyone is rushing for liquidity, rushing for cash. I'm going to be trading the euro versus the Norwegian krona because of the bearish bias towards the Norwegian krone. The pound versus the dollar on the downside. Okay, red is down, green is up, right? That is again because of that rush for liquidity, as well as the lack of confidence in the UK's economic future. They are dealing with Brexit, which is now not even being mentioned. On top of that, we have not seen exactly what effects the coronavirus will have on their economy as yet, or at least not in solid numbered format. So we will see when that data comes out. Of course, we know it's not something that is positive for any economy. Currently, where I live, I am also under a lockdown sort of situation. The USD JPY, rush for liquidity. We're looking at something interesting here. Typically, we would get when we are in a risk-off sentiment, the JPY and the Swiss franc would catch a bid. There would be a rush towards security, a rush towards confidence, and that typically goes towards the JPY and the Swiss franc. However, that has not applied because these are not normal risk-off circumstances. This is a huge global macroeconomic risk factor which has inspired a lot of fear, a lot of a lack of confidence, and not even the JPY or the Swiss franc is catching that bid. It's just a rush for cash and liquidity. I actually know of one money manager who every day on his way home he's going to the ATM. Of course, we've not seen massive bank runs yet. But every day he goes to the ATM, pulls out his wads of cash. Every day. Every day. Because as speculators, our jobs are to know the future, at least to some degree, what it could look like. And people who are following the data closely, we know that that is an inevitability. So we are doing these things in advance. Alright, so the USD chef, again, rush for liquidity. So the chef and the JPY not catching the safe haven bid. The Aussie USD, I showed you that in the oil video. That's been a massive bear market. We are looking at, let's see if I can pull that one up here. We are looking at, where is it? Let me just pull it up. We're basically looking at selling into any rallies that are occurring on that currency. We may get bounces, and any bounce is a great opportunity to sell into an obvious bearish bias for the Australian dollar. Let's take a look. All right, so here we can see the massive sell-off here. This is a daily chart, and anyone who was on the downside here actually is making a lot. I was actually in this market very, very early on. I caught a really nice piece of the head and shoulders that happened at this point. Yes, I do swing trade, and no, I did not manage to catch the entire thing in one move. I'm not that amazing as yet, but I was bearish from this point here, at which I caught a number of trades, smaller swing trades going down to these levels. And I remember at this point where we can see this sort of uncertainty around this level, whether the markets would break these lows or not. This is where I got out. I was waiting. And at this point, there were a whole lot of other macroeconomic drivers to be paying attention to, driving this currency down, supporting that bearish bias. Here we can see the other currencies that I have in play, and we can see the reason. It's generally a rush for liquidity and the Aussie dollar weakness. Now, what's going on with the Aussie dollar is that their relationship with Asia is what is important when it comes to the current macroeconomic environment. Australia's economy actually is dependent on China. A lot of Asian tourists go to Australia to participate in their economy through the education system and through their service industry. And because of what is happening right now in China, that is gone. Imagine schools that have relied heavily on an influx of students every semester from Asia suddenly not getting that influx of students, and that then trickles down to all these stores that have set up around facilitating sales towards these students, etc. That, coupled with their own coronavirus issues, would be more fundamental drivers to the downside for Australia. All right, so we will not be taking any long biases on Asia in any format. We are looking at selling into all rallies when it comes to Australia, New Zealand, and anything of that sort. All right, so that is the whole thing with the currency markets. One thing to know, other than the massive rally in the US dollar as outlined, I'll show that to you, is that we are calling for that recession already. Actually, let me show you the jobless claims, which have skyrocketed. These are the amounts of people that are currently claiming for, making jobless claims, the amount of people that are unemployed. And we are expecting this number to rise. Now we can see that this is a huge number relative to all the other numbers throughout. And this is an article from Bank of America, where their economist has said that they're expecting a growth from that chart in terms of the amount of jobless claims. They're expecting basically recessionary environments and depressionary environments. So that is another fundamental driver to look out for. All right, I'll catch you all later.